Hello, please view timestamps in the video descriptions, thank you, and let's get started. JPMorgan says Bitcoin could rise to $146,000 long-term as it competes with gold. Bitcoin's volatility would need to drop substantially before it can match gold in terms of market value, the bank's strategist said in a note Monday. Over $3 billion has flowed into Grayscale's Bitcoin Trust since mid-October, while gold ETFs have bled $7 billion, according to JPMorgan. Bitcoin's remarkable ascent past $30,000 has stunned Wall Street, and one of the biggest U.S. investment banks thinks the digital currency could have much further to run. In a note published Monday, JPMorgan made a bold long-term price target for Bitcoin, claiming the red-hot cryptocurrency could rally as high as $146,000 as it competes with gold as an alternative currency. But there's a catch. Bitcoin's market cap, calculated by multiplying the price by the total number of coins in circulation, currently stands at over $575 billion. According to JPMorgan, it would have to climb by 4.6 times to match the $2.7 trillion of private sector gold investment. For Bitcoin's market value to reach that level, its price volatility would need to drop to give large institutional investors the confidence required to make big bets. Bitcoin is known for its wild volatility, and it fell sharply Monday to briefly dip below $30,000 just days after reaching that level. Bitcoin was up 1% in the last 24 hours Tuesday, trading at around $31,720, according to data from crypto market data provider Coinbase. This long-term upside, based on an equalization of the market cap of Bitcoin to that of gold for investment purposes, is conditional on the volatility of Bitcoin converging to that of gold over the long term, JPMorgan strategists wrote. The reason is that, for most institutional investors, the volatility of each class matters in terms of portfolio risk management, and the higher the volatility of an asset class, the higher the risk capital consumed by this asset class. Crypto bulls have said that Bitcoin's recent rally is markedly different to a late 2017 bubble that saw it zoom close to $20,000 a coin, only to sink as low as $3,122 the next year. That's because institutional investors are starting to buy in, and this is seen as a crucial confidence boost for the digital asset. Skeptics view Bitcoin's 2020 rally, which saw it advance more than 300%, as reminiscent of the frothy 2017 market action. They see it as a speculative asset with no intrinsic value and a bubble that is likely to burst at some point. Still, JPMorgan says there's little doubt that the institutional flow impulse into Bitcoin is what distinguishes 2020 from 2017. A convergence in volatilities between Bitcoin and gold is unlikely to happen quickly and is in our mind a multi-year process. This implies that the above $146,000 theoretical Bitcoin price target should be considered as a long-term target, and thus an unsustainable price target for this year. Many institutional investors are using investment vehicles like Grayscale's Bitcoin Trust as a means of buying into Bitcoin. According to JPMorgan, more than $3 billion has flowed into the Grayscale Bitcoin Trust since mid-October, while gold ETFs have bled $7 billion. Some investors may find JPMorgan's lofty price target for Bitcoin quite jarring. The bank's CEO Jamie Dimon once called the cryptocurrency a fraud and said Bitcoin mania is reminiscent of the tulip bulb craze in the 17th century. Dimon is, however, more supportive of the underlying blockchain technology that served as the foundation for digital currencies like Bitcoin. JPMorgan has invested heavily in the space, creating its own digital currency called JPM Coin and establishing a new unit devoted to blockchain. Bitcoin tops $40,000 for the first time, doubling in less than a month, causing observers to run out of superlatives and Google users to query about whether a crash is coming. Bitcoin's price topped $40,000 for the first time Thursday, only hours after the leading cryptocurrency blew past $38,000 and $39,000. The price of Bitcoin set a new all-time high of $40,123.30, up 13.45% over the last 24 hours. Yesterday, Bitcoin, BTC, plus 6.87%, passed $36,000 and $37,000 for the first time before rocketing today past $38,000, $39,000 and now $40,000. It continues a wild start to 2021 and follows a landmark year in which the cryptocurrency rose more than 300%, with an almost 50% gain in December alone. On November 30th, Bitcoin breached a nearly 3-year-old high of $19,793. By the close of December 31st, the cryptocurrency had risen about $10,000. 7 days into 2021, Bitcoin is on pace to put December's performance to shame. It's now up 36%, or about $11,000. Bitcoin's price is now more than twice the previously mentioned all-time high of $19,783 reached during 2017's bull market run. The prevailing narrative of this record-setting run is a growing view that Bitcoin represents a form of digital gold. A view that has brought a flood of institutional investors into the cryptocurrency. Among them, Anthony Scaramucci's Skybridge Capital, $182 million in December, insurance giant Mass Mutual, $100 million in December, and Guggenheim Investments, up to 10% of its $5 billion macro fund. The latest records, however, may have more to do with the storming of the U.S. Capitol on Wednesday by President Donald Trump's supporters believing the election was rigged and upset by the certification process that was underway than with any inflation hedge. Global macro uncertainty has the potential to devalue fiat currencies, which in turn could potentially increase the attractiveness of Bitcoin. A disputed election followed by protesters breaking into the Capitol with at least one person being shot and killed would seem to fall under the category of uncertainty. In addition, with the Democrats now in control of both the House and the Senate in the U.S., the chance of increased government spending is viewed as going up. Increased spending is considered a possible source of inflation, against which Bitcoin is viewed as a hedge. With a market value now of $746 billion, Bitcoin is more valuable than all but 7 publicly traded companies, sitting between Tesla at $758.8 billion and Tencent at $723.0 billion. The market's supply of dollar-pegged stablecoins is keeping pace with Bitcoin's meteoric rise. Since New Year's Eve, the supply of Tether, USDT, down -0.51%, has growth by over 10%, reaching 22.7 billion USDT at last check. Total supply of the runner-up stablecoin, Circle's USDC, -0.32%, has also grown by double-digit percentages so far in January, currently sitting at 4.4 billion USDC, according to Glassnode. U.S. federal regulator says banks can conduct payments using stablecoins. Federally regulated banks can use stablecoins to conduct payments and other activities, the Office of the Comptroller of the Currency said Monday. The federal banking regulator published an interpretive letter addressing whether national banks and federal savings associations could participate in independent node verification networks, INVNs, otherwise known as blockchain networks, or use stablecoins. The letter said that these financial institutions can participate as nodes on a blockchain and store or validate payments. Any banks that do participate in an INVN must be aware of the operational, compliance or fraud risks when doing so, an OCC press release warned. Still, the OCC said INVNs may be more resilient than other payment networks due to the large number of nodes needed to verify transactions, which can in turn limit tampering. Kristen Smith, executive director of the Blockchain Association, said on Twitter that the letter states that blockchains have the same status as other global financial networks, such as SWIFT, ACH, and Fedwire. Brian Brooks, the acting comptroller of the currency, said in a statement that while other nations have built real-time payments systems, the U.S. has relied on the private sector to create such technologies, seemingly endorsing the use of cryptocurrencies, specifically stablecoins, as an alternative to other real-time payment systems. Brooks has overseen the publication of 2 other interpretative letters and a number of other crypto-friendly moves during his time overseeing the agency, including a letter telling federal banks they can provide services to stablecoin issuers and store reserves for stablecoins. Last month, Brooks announced his support of a letter by the President's Working Group on Financial Markets that outlined how stablecoins should be regulated within the U.S. President Donald Trump has twice nominated Brooks to serve a full 5-year term heading up the agency, including earlier this week. However, it's unclear whether the U.S. Senate will schedule a confirmation vote. As of press time, it does not appear likely it will do so before President-elect Joe Biden takes office on January the 20th. Monday's interpretive letter also comes on the same day as a public comment period for a proposed financial crime enforcement network rule closes. The controversial rule only had a 15-day comment period, and has reportedly been spearheaded by Treasury Secretary Steven Mnuchin, who appointed Brooks to the OCC in early 2020. Monday's OCC letter goes to show that there's not an all-out assault on cryptocurrencies, that there are bright spots in the government that realize that crypto networks are going to be the foundation of future payments systems and other financial services applications. So we welcome this type of interpretive guidance, Smith told CoinDesk in a phone call. Bitcoin is just under $40,000. Ethereum is sitting near $1,250. Ripple has risen in near 33 cents. Litecoin is near $173. Cardano is near $0.307. Almost $10 at $9.86. Bitcoin Cash is near $463. Stellar near $0.3181. Chainlink near $16.25.